And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And of course, this is the show where we bring you where the action is in the broader markets. As usual, we're going to take a look at some of the items that drove price action last week. Where did the indexes close? And then beneath the surface, growth stocks came roaring back for week 2 of 2024. Great news for those that were believers last year. They can renew their belief conceivably. And so let's take a look. Last week, there was certainly some impactful inflation data that was released. First was that core CPI, Consumer Price Index. It did come in a little stronger than anticipated, but then when more closely examined, it is showing overall a year-over-year deceleration. So not a lot of big news there. Producer Price Index, however, also came in, and that came in today, and that is going to have a lot more to do with wholesale inflation, and it dropped for the 3rd month in a row. So good news as it relates to inflation data. We did see interest rates wobble a bit around that 4% level, the 10-year yield. That's a key critical level. We'll get a little bit more into that as far as where it closed. And earnings season began. We'll talk about some of the names that reported today and what to be on the lookout for next week as earnings season begins to ramp up. And of note, next week is a holiday shortened period. For those of you, Monday the markets will not be open. So let's go ahead from here, take a look at the S&P 500 and get a very good feel for where we are currently standing. And here we are. This is a daily price chart of the S&P 500. We were up about 1.8% for the week. You can see this nice, steady progression. Very good news there with that RSI remaining in positive territory. And likewise with that moving average convergence, divergence, that MACD, we have regained these shorter term 10 and 21 day simple moving average. Quite simply, the uptrend in the S&P 500 remains in place. From here, we can take a quick look at the Nasdaq Composite. This particular index was up quite a bit more, 3.4%. And I apologize for not updating in this because in turn, that RSI is now negative. We regained those shorter term moving averages as well. And that is all about those growth names, in particular, those heavyweight FANG or Magnificent Seven stocks on the move. So from here, we're going to take a look at the underlying 11 sectors in the S&P 500, all about capturing and uncovering where that relative outperformance is currently. Is it progressing higher or lower? I've added an RSI indicator. So these sectors are sorted in descending order. It's a 2-month daily price chart view. And again, we're on the lookout because up here in this left top quartile or this first line, these are your relative outperformers with the S&P here listed 3rd, and then your weaker areas down in the lower right quartile. But let's go ahead and take a look. XLV. Now, the healthcare sector overall was up only 1%, but a lot of that strength emanating from the outperformance in healthcare. Prior to this week, this period of back and fill, 1% gain relative to the broader markets is really a chance for these healthcare names to set up and to remove the frothiness of this overbought position on that RSI. So as we move through, XLC up here at the forefront, this was a big outperformer. Nice base breakout, continuation rally, all about those big mega cap names within this communication services internet related area, but underlying as well. And subscribers to my MEM Edge report will be well aware of where the strength, and we'll get a little bit into that here as well, and how you can participate. And as we move through, let's take a look at technology. 4.4% gain. Of note is the fact that it was after last week's 4.5% decline. So in essence, regaining or close to regaining its high in price from the end of last year. Lots of names in this area. I'll share with you some of those industry groups in tech that have come back into play as well. and definitely what you want to see as far as the broader markets, the regaining of this leadership area, technology. As we move through, financials stumbled a bit today. I'll share with you precisely where, but it is all about earnings, and numbers in the banking space were quite mixed. Moving through, taking a look, of course, you want to be aware of those areas that faltered and were weaker. Utility stocks down almost 2% with now a negative RSI. As we move back, let's take a look here at some of these other relatively weaker areas. XLB is the materials sector, and it was down about 1.1%, continuing to decline. There were some bright spots in here as well that I will share with you. And then XLY, this particular sector was down. Actually, it was up 0.8%, but of note is the decline all about Tesla, which lost almost 8% this week, heavyweight name in that consumer discretionary area, and then energy, which is continuing to show relative weakness, down 2.5%, and continuing to be quite the underperformer, certainly over the last couple of months. From here, we're going to take a look beneath these sectors because it is very interesting, compelling to have a good sense of where that relative outperformance is, where the money flows are shaping up. But this is going to take us beyond that with these industry groups. I do use ETFs that are highly relevant and correlate quite nicely as far as uncovering beneath the surface where the strength is within a given sector. So again, RSI, descending order, and we can take a look up here at the forefront is IHI. This is the medical devices ETF, up almost 4%. So quite a bit of movement there. This is an area, my MEM Edge report, we do have representation. It has been on the move higher, and it's nice to see a growth area of a normally defensive area on the move higher. And then moving through IGB, this is the software sub-industry grouping, up 5.7%. Now, however, of note, similar to the technology sector, it was hit last week, so that this past week's gains were primarily making up those losses with a bit more to the upside. Take a look at this MACD, black line poised to close up above the red, in positive territory with the RSI. So software stocks back on the move higher. I'm going to share with you as we move through one area or one way when you were looking at these sub-industry groupings, how you can potentially refine your search further. Where within software, for instance, is that outperformance taking shape? And is it fundamentally sound? Biotech's up here at the forefront. Again, they were rather flat last week, but again, similar to what we were looking at earlier with the healthcare sector, this is an area that has been on the move, a bit of back and fill, a bit of sloppiness here as well, but still very much in a confirmed uptrend. Moving through housing stocks, they were up more than the S&P 500, and a lot having to do with that interest rate dropping back below that 4% level, and then growth prospects remaining strong. Now, we did see KBH report their earnings today, not particularly healthy, keeping an eye on that, but for now, home builder is, those names remain in a nice confirmed uptrend. Semiconductors, up 3%. They did not quite regain the percent that they lost during the prior week, the first week in January. And you can see that it is still in the throes of regaining its uptrend. However, we would be remiss to not mention that NVIDIA, I'll talk about this later, last week's base breakout up 11.5%. But of note, it is not a widespread move into semiconductors. It's rather focused. So moving along, one last area I did want to share with you here in financials. I talked about the financial sector overall down about 0.5%. This is KRE, the regional banking ETF, and it was down 2.6%. You can see we're on the cusp. Actually, that RSI did dip into negative territory. And again, all about mixed reports from these bank stocks as they are anticipating potential reduced lending activity going into next year. And that is where many of these banks gain their certainly income and their growth. So not great news there. Plenty more banks due to report next week, so we'll see if that outlook is in any way revised. XRT, actually, I said last one, but here we are. This is a sector that also fell 0.8%. Not particularly constructive, but I will tell you next week, December retail sales data will be released. And it will be very interesting. We did see several companies pre-announce their holiday sales, and overall they were quite strong. So potential pullback, depending on those December retail numbers, we could see a nice bounce there. So I did mention as it relates to utilizing ETFs and really how strong that can be as a way to get deeper into uncovering where potential relative strength is. So what I'm going to be sharing with you here is a view, and this is a watch list that you and any of you can very easily put together on StockCharts.com, utilizing these ETFs as a way to really zone in on where the strength is. So not quite sure. I believe I have about 70 ETFs here, and what you can do, each covering a different area. This is that candle glance view, but very quickly I'm going to share with you another view that you can do on a very regular basis if you're inclined. Takes all of 2 minutes, and using those various ETFs, quite simply that summary view when the market's open throughout the day, what and where is the most upside, and then on the negative side, where is the worst by way of deterioration. Today, it was all about airlines. And we'll just go ahead from here and take a look because Delta Airlines reported their earnings, and you can see that JETS, that airline ETF, faltered, moving back into a negative space, something you would want to be aware of. So let's go ahead back to that candle glance view of these ETFs. Again, that RSI in descending order. And once you get your arms around some of these, because certainly SHY, not everyone's going to be familiar with that particular ETF, but I will tell you that it is short-term treasury related. And as we are seeing interest rates decline, you are seeing these bond funds continue to move higher. Another name in this space as it relates to these bond funds is IEI, and this particular ETF is all about the 3 to 7 year treasury bond. And you can see that advance. Interest rates did get back up above 4% on that 10-year, but as they decline, another reacceleration on these bond funds. Let's go ahead back again with this RSI, looking at some of these stronger areas. We did review XLV, that is healthcare, but let's take a look at URA. This is the Global X Uranium Fund, and we can see it had been trending up nicely all this past, certainly 2-month period. But let's take a look at this black line up through the red that began at the beginning of this week that could have helped you capture this significant move into uranium stocks. And this is all about today's gap up of 7%, all about Kazakhstan. And they are, in fact, the world's largest provider of uranium. And because of a lack of sulfuric acid, there is anticipated that there will be reduced supply as the demand for uranium continues. So we could very well see further upside there. Let's go ahead and move through. Natural gas had a very nice move as it continues to potentially reverse its downtrend. I'm going to go ahead and pull up a longer term chart here, because what you will see is that we have not been able to get back above certainly this level here at about that 7 for quite some time. It does have some work to do, but it could be of interest to those of you that perhaps are a little bit more active in your trading. And I did mention to you software stocks up quite nicely this week. Let's take a look at a software ETF that is also on the move higher. This is HACK, and it is the Cybersecurity ETF. And I will tell you, having software names and the leading cybersecurity software stock on my MEM Edge report, very, very familiar with this space. And I would urge you to pay attention because despite already having had a significant advance, there is research out this week that is anticipating continued and an accelerated growth for the remainder of this year. So when you are looking at particular groupings, my work is all about drilling down beyond that, because when you talk about cybersecurity, there are any number of sub-industry groupings by way of firewall. Is it allowing administration rights and so forth? And you will want to get your arms around that. From here, I am going to share with you some of the names in this cybersecurity space that is Cyberark. And here we are. You can see, again, this is a gap up on earnings, nice continuation rally, pullback, seemingly in a nice uptrend again with the move back into this grouping. Now, I talked about some of these areas, for instance, those that provide firewall. Let's take a look at a top performer in that group that was one of the top performers for the week. And this is Palo Alto. You can see this pullback and then a nice rally as the stock reverses its downtrend. Their primary area as it relates to their customer base is the US government, who is continuing to spend. That's one of the reasons for this driver for that downtrend reversal as analysts raise estimates. And certainly from here, we can talk about other firewall related areas, because you want to make sure you're in that right and that correct stock that is going to be poised to perform. Here we are with CloudNet, another firewall related stock, but we can see that it has not been able to regain its prior height. And one of the reasons and one of the facts or items that I looked at last week's pullback was making sure that that RSI remained positive despite the pullback. And those are the names that are faring better this week. And from here, we can take a look at one other name in this cybersecurity space. Again, you want to make sure you're in these names that have more potential. And this is one that does not. OKTA is the ticker symbol, all about admin access and internal threats. And we can see it is not participating in the rally. You want to be in those names. I did talk about CYBR. That would be a prime example of a stock that is poised to trade higher from here. You want your stock to at least be trading in line with that industry group, and in essence, outperforming. I will share with you one name that is on my MEM Edge report that would fit that profile by way of outperforming with the group. This is Crowdstrike, CRWD, nice downtrend reversal, and another week of outsized performance for this particular stock. Going back, let's take a look at a couple of other of these ETFs that may alert you to areas outside of the US that are advancing that you might not otherwise be tuned into. Rather than going ahead through this, I'll go ahead and share with you some of these other areas outside of the US that are on the move. NFTY is one of them. This is the First Trust Nifty 50 for India, and you can see this advance that they've already experienced. And then this week, in particular today, a gap up. And what's happening in India is the government is spending so that there is increased improvement in their underlying economy, and consumer and industrial demand is also driving growth. So their underlying market does appear poised for another leg up after this period of consolidation. Last up here, outside of the US, we can take a quick look. Many of you, I'm sure, if you are very regular readers of headline news, will be aware of the fact that the Japan market did hit a new high this week. Take a look. And it is all about foreign investments in these stocks. simply because they're exhibiting strong earnings, a lot by way of growth. And then also a weaker yen is driving dollars into their market. And last up, the fact that they are not anticipated to raise interest rates due to a weaker labor market. So that was certainly one area and one item I wanted to share with you by way of using. And in my case, I do have it populated with a number of ETFs that can keep you tuned in not only to what's taking shape here and then more fine-tuned, but also taking a look outside of the US. Let's go ahead and take a look at some of these names that did report earnings this week. Again, it was a mixed result. Here we are with Wells Fargo, WFC down 3.3%. They did have to allow more by way of reserves than anticipated. We can see this RSI now below 50 and a general downtrend shaping up. Another major bank that reported today that didn't fare that well, and that is Bank of America, already declining going into their results. Keep an eye out on that RSI if we break below that 50, because your next area of potential support is quite far away down here at that 50-day simple moving average. It was not all bad news. Here's Citigroup up 1%. We can see this bar that printed today that is indicating uncertainty. The bulls and the bears are just not certain, but it did close above this 21-day simple moving average. Next week, we do have a number of banks due to report, some of these larger regional banks, Comerica, third among them. So it will be quite compelling to see how they are anticipating growth going into this year, because they've really had significant rallies going into the release of their earnings. Also due to report next week is a major semiconductor stock, Taiwan Semi, and you can see it's been bouncing around, not participating as we cited. This semiconductor group is very much a have and have not industry. So it's important that you are tuned into which areas are working, or that you subscribe to a top newsletter such as my MEM Edge report that is all about getting you into that correct sub-industry grouping and then that stock that can benefit the most. Last up here, I'm going to share with you a couple of names. We did see some nice base breakouts in retail despite that XRT view, and here we are. This is Urban Outfitters, gap up, and a nice continuation rally. This is one of those companies that pre-announced strong holiday sales, and you can see that it is acting really quite well. Other companies also did report positive holiday sales, but not as constructive. This is Lululemon, had that one-day rally and is still continuing to trend lower, not looking very constructive there. And then last up, a big well-known, certainly retailer that is on the move higher. We can take a look at Costco. It did experience this base breakout this week into a nice uptrend, appearing to have further upside from here. And I will leave it there. Guys, have a fantastic weekend. Those of you who are able to have a long weekend, enjoy that as well. And as usual, I'm going to look for you again here next Friday.